right? Even here, the Bank of America wrote a report, and they talked about just how great it is to hold on to Bitcoin. And they actually had an interesting point in part of their article write-up where, and I can't see it right this second, but you can go look through, where effectively they were saying the dollar cost averaging is great, but even if you were to have thrown your money in, let's say you were going to invest $1,000, you could either DCA it or you could throw it all in at one point. As long as you're holding it for a decent amount of time, throwing it all in at a certain point is still going to prove itself profitable, in some situations more profitable than dollar cost averaging, right? So once again, not financial advice, but just interesting. So to give you something more specific, they say here, using data going back to 1930, Bank of America strategists found that a basic hold strategy would have yielded total returns of 17,715%. If, on the other hand, investors tried to time the market, they could have missed out on the best trading days. Missing just 10 of the S&P 500 best trading days each decade would have diluted the total return to just 28%. So, that is another way of phrasing what I just said about how if you missed out on some of these days, you know, you could have gone from 17,000% to 28%, which is crazy. But, you know, if your money's in the market when the move happens, by golly, you know, what a powerful move, you know. So anyhow, that's that story.